Hey, it's Mack with PriceActionTradingSystem.com. It's Wednesday. It is December 16th. This will be our chart lesson for the day. And as suspected, they did raise the rates a quarter of a point today. We sold off first, but we ended up rallying after that. Um, we closed around 2062 or so, and yesterday we closed around 2037. So pretty good rally. Um, you can see this big news move right here. Announcement move, and then I'd look for a measured move, and you see we actually surpassed that a little bit. But one thing I haven't talked about lately, because we haven't had a big volatility news item hardly, it seems like. Um, but when you get a move like this, it almost always, prices will almost always take it back and kind of reset at the original price. And you can see we were right in here when the announcement came. So we shot down, we shot up. This was just a trading range. We had a failed break lower, we had a failed break higher. Then we kind of got back in here inside the range, and prices reset right around that same price, bounced around, and then we went higher. And that's really typical um, when you get a big move, exaggerated move like this, for prices to kind of work their way back to where they started from and what I call reset, whatever word you want to use, but it just kind of works back into that same price range and starts over again. It kind of resets the market and it goes back to normal, and you kind of see things move forward from there. So, the worst thing to try to do, even though this could have kept going higher and higher and higher, I've seen that happen occasionally. Generally, what happens is just what you see. You see it going down, 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 and then you decide to jump on down here, and then it takes off, and you have to exit with a loss. And then you say, oh, I better get on long, and then it's back, and you end up right back where you started from where prices were before the news item. So don't, I know there's some strategies out there to trade the news and this and that, but I'll be honest with you, you're just taking a huge chance unless you're just going to try to jump in there and get a scalp. And even then, um, you know, you don't want to be getting in way down here away from the EMA like that, or way up here away from the EMA, because it's probably coming back. But you can see we were pretty much flat. We had a little work. We worked up, then we worked back down. Then we had the failed break out the bottom, failed break out the top. Then we kind of worked sideways again, and then headed up. And we did trade up into this trading range, so it doesn't surprise me that when we succeeded going out, we went higher. We traded out the upside. And that's pretty standard. That's kind of what you expect to see. But notice I didn't mark anything afternoon. On a day like this where you're expecting a rate change, a rate hike, and even if you're not, any kind of FOMC day, you better be flat pretty close to noontime. Not much you might take a trade right into noon, but you better be flat well before, because this is what usually happens. You get stuck in a little bitty tight range like that, and you can't get out before the news, and you end up taking a loss or something. So just, my advice is to be done before noon. Don't take any more trades after noon, and then wait for the volatility to settle down and prices to kind of reset and get back to normal, or at least for the bars to kind of get back to normal, and then maybe try to, if you want to get another trade or two in. But you generally it lasts for an hour or so. Today I'd say it was pretty much volatile until right in here when it kind of reset, and that's only about 20 minutes that it was really volatile. And then that would have given you another hour and a half maybe to trade before the 2 o'clock hour. So not as many trades a day, but it was still a really good trading day early on. Um, but I'm gonna back out, talk about the trades, and we'll wrap it up for today. And you can see here early on we were trending up, and we had a nice trend here off those first couple of swings. And you had a second. You actually had a. Let me move this. You actually had a second entry long here, but you can see your signal bar is not very good. And then we had kind of an inside. Well, it's not really an inside bar. It broke lower and then broke higher. But you don't want to enter right here on that second entry. But when you get this bullish bar right here, and this is still basically still part of this original move. So this is still like a second entry here. But I like that entry, and you can enter. You're looking for prices to retest this high. It's probably going to happen. This pullback is really to retest to test this double top, and it holds and it goes higher. And then you get a second entry long right here. And this is a fairly bullish bar. It's got a little bit of a red. Oops, don't want to do that. It's got a little bit of red to it, but you can see all that stem, and I mean it could have easily closed up as down. So I like entering on that one. It's a second entry. We still don't have a new high yet. But what I really like is that it doesn't completely take off and then it pulls back. And this is one I like adding on. It gives you another entry right here. I would have liked it even better if it broke below here and gave you that failed second entry short. But this is still good enough to be probably trap some people. And you figure you're going to push on up at least to test this high, maybe a new high. So that's one of the ones I like adding on. And so you get a little chance to get a double right there. And if you entered here on a stop, you probably could have ridden this all the way to the top. And notice there's two. There's your first leg after your break. And a lot of times what happens, you'll get a break of a trend line, you'll get two legs up to a new high, and then it reverses. That's a perfect measured move. Two-legged measured move. So, and there's a little two-legged correction in the middle. And then we work down, we come back, we test this area right here, we come back, we test it again. So you got a failed second entry long there. And you don't want to be going long now that you've got a break and two legs up. You just kind of sit tight and you get that trap. And the first bar is not really that bearish. This one's a little more bearish. It doesn't close quite on its end, but because it's a failed second entry long, just put a stop right there. And you can see how everybody had to exit. It rocketed straight down. That's a nice little trap, and you can tell it's a trap by how it rocketed down real quick. And I mean, you're in and out of that thing in a blink, and you probably could have had a runner right there. I don't think it came back to get the break-even stops. I think it missed it by a tick. And this is a little double top right here, so you can treat this. This is basically a failed second. This is like a new high. So first entry, pullback. There's another failed second entry long right there. So go short. I actually didn't like going short on that failed second entry long because it's right into a double bottom. But it turns into a little breakout pullback short. So I like entering there. And you know, this one probably should be green. So this, if you did enter on the green one, this is one I would, another one I would add on. So let's mark them both. Hopefully that makes sense. This one is like a failed second entry long. I really didn't like it at trading the failed second entry long, but there's some reasons to be aggressive and want to take that. But I like entering on the breakout pullback short right there. Nice short. Then we make another new low, pullback first entry, pullback second entry. And early on, I wasn't sure. I actually thought maybe the trend line was there, but in the end, I think this is a two-tiered channel. And this is your trend line over here. And there's no way to really know that for sure. But when you keep turning down off the trend line, you got to consider it. And you get a break here, and you actually had to get another move up before it made a new low, and then it took off higher. And see, even with the volatility and all that, it still made a new low and still kind of followed the price action rules. But then you had the second entry short right here. It's more of a neutral bar, but it's right off that suspected trend line. It's right off of and notice how that gaps that line right there. It always tells you that there's something there. So there's definitely something there, but I just believe that people wanted to see another break of this one, and you could see it both ways. But anyway, you get two legs down, and you overshoot the low side. So that generally tells you a break is probably coming. But we don't get it here. We turn down right off, and it confirms that trend line. So now you got to say, hey, this is probably definitely a two-tiered channel. Just go short. It does pull back and create a little trap and go short again. So I like adding on there. At that point, I had this line, I'd moved it down some to those last closes, and it still looks pretty good there. I ended up moving it up because we had more touches on both sides there. But you know, where I had it here earlier in the day is just as good a spot as any, and it may even be better. I don't know, but that's another one where you can double up right there. I like adding on. If you entered here and you want to be a little more aggressive, you can add on. And if you didn't enter here, definitely enter here because now they trap people again. There's a second entry short here, but this is a little, you got the support. It's like a little failed break lower, and this is not a bearish enough bar, and you don't want to go short way down here at the very low. So you just kind of got to sit tight, and then you work two legs up, and look at those matching highs right there. You can see that little double top, but there's some matching highs. You get that one little tick higher, and so that's a second entry short right there. Just go short. And if you waited on this one, you could have waited on a break below it and then dropped a limit order back here if you wanted to be a little more conservative. It would have come back and filled you. And then it comes back and makes a double top and gives you another chance to enter. And so I like that one. And at this point, you would have moved this on down here. You probably would have had it back to here by now. And so you got plenty of room to get out before you get back down here. And it does bounce here. The only reason I don't like going long is it's into the 12 o'clock hour. It's real close. If you wanted to go long there, I'm okay with it. I'm going to mark it green though, just because it's really, really close to that 12 o'clock hour. And sometimes you'll get, notice how it didn't do anything much after that. You would have gotten out of that one. It's bouncing off the lows. The time on that one's 12:04, so it is into the noon hour, so I'm going to leave it green. And then I wouldn't take anything else. You can see how it just kind of gets kind of stuck right there. It does have a little jump up. But as soon as that news comes out, boom, the bottom falls out. It makes its new low. This is the first break here. Notice you kind of got one leg up there. There's two legs in there, but that's a leg up. And then notice how it looked like we were going to have a measured leg up kind of, and then it shot up a little bit. And there's a trend line right up through there and all, but I didn't mark any of that. You can see that. You get the break, the new high, and then it sells off. But we're looking for the retest from this move down. Now, of course, you may not have gotten it because the range seems to be taking precedence and holding prices back here. So you could have bounced here and gone higher and still been good to switch sides because the range kept it from going. But you had the failed break lower. Even during the news, the price action still valid, still works. We're moving up, and I'll show you this. There's a trend line up here. I didn't put it on because you wouldn't be trading this. But there's your trend line working up. You get your break and move to a new high. Now you got one working down. You draw your trend line off those first two swings. You get a break here. It's tempting to go short here. And you really could. There's a failed second entry long, the whole bit. I just didn't feel like prices had quite settled down enough. But looking, it's probably, I probably should have that one marked, and I'm going to go ahead and mark it because that's a nice setup. And if it wasn't for the news, I definitely would have taken it. Definitely would say you'd take it if you're trading. So you don't quite get a new low on that break. You come up, you come down, you try to make it again. You don't want to go short here. This is really your signal bar. There's some overlap here. This signal bar is too big and it's too close to the low now, so you got to skip that one. But when it comes back up, makes a lower high and gives you that big bearish bar, go short right there. You're looking for it to at least come down here and test these lows, and this thing just takes on off and then reverses. There's a second entry long here, but again, this is too big a bar, And we do have a break of this and a new low, but we didn't quite get back down to the previous lows down in here. So uh, there's just not enough reasons to want to go long here. It's not a good enough setup, even though it is. Um, Actually, there's a failed break lower there too. You notice all those. Let me go ahead and draw the line. You can see that failed break lower right across there. I mean, you can see that support right across there and that failed break lower. And then we get back in, but it comes back and tests it. It's tempting to enter here, but I think you want to wait and see if you get a little better entry. And then you get the failed second entry short right here. And so I like going long right there. Um, you had to be a little bit concerned. By this time, this support across here had moved up. I would have had it up here by that time. And so there's still some resistance across here. So there's still some reason to be concerned about that one. Um, but I still like it because of the trap. And this tick here does go a little bit higher than that little double top. So it's like a breakout pullback long as well. And you don't have to have a perfect signal bar because it is a short trap most likely. And you can see it rocket on off. It took off from there. They had people then. And once it started going higher, I would be looking for at least a measured move like so. And so that would put prices to at least right here. And you can see we got to the tick, and it started finding resistance. And it ended up going a little higher before it sold off. But that's because most of the smart traders have all their exit orders in here when you get the measured move, or I shouldn't say all, but a lot of your smart traders, and they're going to exit there. There's probably going to be a natural resistance, even if it's only momentarily, where that measured move is, because the market market geometry is real. I don't care what anybody tells you, it's real. I do this stuff every day, and I show these measured moves, and it's real. So I don't know why. I don't care why. All I know is it works. And so and there's some of them that'll use fib lines to find these plots and call it fibs and so forth. And it's all interrelated, but it's market geometry, and it is very real. So pay attention to it. All right, that's pretty much it for today. It's a little quieter because we had the hour or so in there. We had to wait on the news and then wait for the volatility to slow down. But they did raise our rates. No real surprise. It looked like the market had already priced that in, and we took some of it back. Will we work down from here or start moving forward again? I don't know. Was it the right thing to raise the rates? I don't know. I guess we'll find out. I wish they wouldn't raise the rates because a lot of different reasons, but we'll find out soon enough if it was a good move or a bad move. But anyway, again, going back to the news item, we don't care what the news is because there's no way to know. I mean, you would think that a rate, common sense tells you that raising the rates, everybody thinks it's going to affect the market negatively. But what people don't realize is they already built that move in over the last couple of weeks, and that's why the market was selling off. And so they fake you out, think it's going lower, and next thing you know, it's going higher. So you don't know it doesn't matter if you know the news in advance and nobody else knows it. It's not going to tell you anything on how to trade it. So forget about trading the news. It's not worth it. You'll get, you're better off to stay out because you're gambling if you're trading based on the news. And I know there's some trading strategies that try to trade the news, and they'll make money sometimes, but in the long run, they're not going to make money consistently doing that. I can tell you that because you don't know what it's going to do, and it will whipsaw you big time. You might get a scalp or two out of it here and there because the moves are generally pronounced like that. So that's always possible, but you're gambling when you do that. And if you want to make money long term and consistently as a day trader, you can't be a gambler. You've got to take the high probability trades where the odds are on your side. And where are those trades? The key entry points. And what are key entry points? They're basically just support and resistance areas, important support and resistance areas. These flat lines are our important support and resistance areas. Or the most important one today was right along in there. That's where you get the most touches on both sides of the line. And the other one was right here. The support was here and resistance was here. And then also your trend lines. All your trend lines are slanted, are angled support and resistance lines. Look where all your big moves come from. Right? You know, there's no secret why these big moves happen here, because that's where the trend line is. That's the key points. Same thing. Look at this trend line. Where did all the big moves generate from? Off those trend lines. The EMA is another one. And when you get the EMA and the trend line working together, like right here and right here, a lot of times they're even better. And notice what happened when we got to these highs here. Then we worked down to the lows. So from there, where do you think we're probably working back to? The highs. If we don't get through, where will we go? We'll work back down to the lows. Once you reach the lows, where are you going from there? You're going to work back to the highs. And here we've made a higher low. We didn't get back down there. So the market's getting a little stronger, and it does. It breaks out, comes back, and look at this pullback to retest that area. Test it twice. It's late in the day, so you probably don't want to take it, but that would be normally a great setup right there, because you came back and you double tested that, and great setup to go long. And that's pretty much it for today. So hope you had a good trading day. I hope you didn't forget about the news. I hope you didn't get whipsawed in here, and if you did, get you a news indicator or figure out to make sure you look at the beginning of the day what time any high volatility news is coming out, and be aware of it. Especially FOMC days, there can be some. I mean, this is pretty tame still. I mean, what is that? That's a 2030 to 2055, so that's a 25-point move in just a short period of time. So I mean, that's tame from some I've seen in the past, but that's still a pretty good move. So not gonna say otherwise. So because it is, it's, you know, the market doesn't generally move that far that fast in 20 minutes, but it did. So, but anyway, I'm gonna wrap it up for today. We'll be back again to do it tomorrow. For now, I'm done. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.